Okay, so we were discussing about this. So Form A2 is basically for is a declaration given by the company that we are making the payments and which are under the limits prescribed by RBI. Now, how will you check these limits? You do not have to check it, because if it is over and above the limits, the bank will refuse it. So you do not have to check it at that point of time. Then you just have to fill that form and sign it. Then there is form 15CB and 15CA. Now what is this form 15CB and 15CA? See, whenever there are transactions which are you can say payments made to foreign parties, then tax is involved, because uh, we have to see form 15CA is a document stating the amount of tax which needs to be deducted on this payment. Now, who gives this form 15CB? Any chartered accountant, practicing chartered accountant will give you this form 15CB after analyzing all the things, all the case scenarios. I mean, whatever the invoice amount is, how much the payment you are giving your company, whether the person in front whom you are making payment to is registered in India, whether they have a PAN in India, whether they have a residential permanent residency in India, permanent office in India. So all these situations they will see the agreement, and then they will decide what is the rate on this. See, the rate we cannot decide here, because we cannot understand, because double taxation avoidance agreements, what are these? There are double taxation avoidance agreements. So basically two countries like India and USA, they have an agreement between both of them stating that if a person is taxed in India, then it will not be taxed in USA, so that double tax will be avoided. So there are agreements between countries. So we cannot explain it right now. These are the detailed agreements, and these practicing chartered accountants, what they do, they understand those, they read all those, and then they see all the things what you have, what you don't have, and they will decide a rate of tax which needs to be deducted from the payment, that they will tell you. So Form 15CB is basically a certificate given by a chartered accountant stating that this amount needs to be deducted as tax from this payment, or zero amount needs to be deducted as tax from this payment, based upon all the situations. They will ask you for the data, and they'll give you how much is the tax. So 15CB will tell us the amount of tax which needs to be deducted. Okay. Now 15CA is a declaration by our company. Now, supposingly in our case we are Bonvoy Hotels, so 15CA is a declaration given by Bonvoy Hotels stating that we have deducted this much of tax amount, which is of course equal to Form 15CB, that we have deducted this much of tax amount and is being deposited to the government. This is we have to certify. Now, why we are certifying this? It is, you can say, when you work into it, and when you will see that there are some tedious returns wherein we provide the data through the government. So it happens that government do not have a basic back check process to verify whether we are depositing this amount to them or not, and there are a lot of other reasons. That's why they take this declaration. Okay, we will not go into this details. So what we have discussed is number of documents which are required for foreign remittance. Why these are required? Because RBI regulates all the foreign payments, and RBI says that all the foreign currency going out of India must be regulated, must be checked. That's why a list of documents needs to be prepared before making a foreign payment. What is that? Number one is the request letter, which is given to bank. Please pay this company this amount in dollars or USD or euro or pound, etc. Then there is a agreement copy or invoice copy. Then there is form A2. Then there is form 15CB and form 15CA. CB gives you the tax amount, how much needs to be deducted, which is given by a CA, and form 15CA is a self declaration. Okay. These documents are required to make the foreign transaction happen, and all these documents you have to give it to bank. They will process the payment to other party and give you a remittance advice that this amount has been paid to the certain party. Okay, these are the documents which we have to process. Now moving on to uh, see, these we have discussed, but just one part I want to elaborate about, that first of all, whenever you want to make a foreign payment, so you suppose you are a finance manager in a company, and somebody coming in and asking for you that we need to make this foreign payment, what needs to be done? So you have to keep these things in mind, because there's some process which finance has to do at the back end, and there are some documents which you need to get from the client or from the person giving you service. So anybody who is coming into you to make the foreign payment, you have to ask them these documents should be there. Number one, agreement in the invoice for processing, they will give you. Number two, it should, an invoice and agreement must be approved by the respective department. Suppose we are talking about digital marketing expense online, and we are paying in US dollars to the company, so that digital marketing expense must be authorized by a sales head, that yes, this needs to be done. Then number 3, we need following documents, or the chartered accountant who will issue that form 15CB will need following documents to process that form 15CB. Without these documents, they cannot issue form 15CB, and you cannot make the payment. Simple. So what are these documents? Number 1, no permanent establishment certificate, no PE letter. We call it no PE letter, no permanent establishment. So the company, let's say it is Facebook, and we are making a $5,000 payment to Facebook. So whomsoever the guy is there on the email, whether it is based in India, whether it is based in US, whatever, you have to ask them whether they have a permanent establishment in India, yes or no. If no, then they have to give us a certificate or on their letterhead stating that they do not have a permanent establishment in India, because this will impact their tax status. Okay, and CA will need it. Number 2, TRC, tax registration certificate. So supposingly Facebook is not registered in India, then they will be registered in US, right? And they'll be paying taxes there. So they have a tax registration certificate. You have to ask for it. Number 3, PAN declaration received from the vendor or the Facebook. Now, what is this PAN? Whenever the company who is doing transaction in India, in some of the transaction they might obtain PAN. They still may not be registered as a company in India, but they might obtain a PAN on a basis of a firm, or maybe some other individual entity, or you never know. So in that case, you have to obtain that PAN number from the company. Either they will say that we do not have a PAN, then the tax rate will change. If they say they have a PAN, they will give it to you, then the tax rate will change, of course, because if they have a PAN, they are liable to pay tax in India in some cases. Okay, we cannot elaborate all the cases, so it is a very in-depth thing to study. So you have to ask for the PAN number. Then there is an invoice copy and the agreement copy. All these 5 things you must have before making or before sending it to the chartered accountant for processing 15CB. Okay, these things you have to keep in mind before making a foreign payment, or before saying yes to the person concerned who are coming to you for making the foreign payment, that these documents should be there with you. Okay, so in the next lecture we will discuss about the accounting part. I think the process is clear. In case you have a query, please write to us. Okay.